Are you having problems being consistently profitable? It might be due to your greed. In this video, I'll be sharing with you 5 major ways to avoid greed in the stock market and how you can apply this method to improving your trades. Apply these methods to improving your trades. Hey guys, I'm Napoleon from Stock Nerds, where we focus on trading in the stock market. If you're new here, make sure to drop a like and join our family. So with no further ado, let's get on into the video. Okay, so greed is a basically a strong or a selfish desire of like wanting something, right? And in the stock market, it's mainly money. Usually with greed in the stock market, people want fast cash. And as a result, they end up blowing up their account or having a red day. So let's just get into it. And here is the first key to avoiding greed in the stock market. And this key is overtrading. All right. So overtrading could eat away your money due to commissions. Regardless if your platform says free commissions, trust me, they're gonna have some sort of commission between the bid and the ask. Or if you get into a trade and it's like late and you don't get in at the right time that you want, so like eventually you're going to pay commission in some form. And if you keep on over trading, it's really gonna affect your profits and it's gonna affect your account. Also, over trading complicates your trading experience and make you open to making a lot of mistakes, right? Because if you're constantly over trading this and that, you're all over the place. So probably you might go into a trade or a position and you only wanted to put like 10 shares and you accidentally put 100 shares because you're over trading, so you're moving fast. And one major thing that I will say to everyone is that we are not these big institutional places, or we're not these big institutional traders. So where we are required to trade like thousands of times or make thousands of purchases and whatnot. We can actually take our time and make that right trade. So that's a luxury for us, right? Our luxury is being able to wait for the great setup before we can make a position or take a position. So now let's look into the second key of how to avoid greed in the stock market, or how you can avoid being greedy in the stock market. And this key is take profit once your setup plays out. And I've been a victim of this as well. So basically, once your setup plays out, once your setup goes as planned, don't try to see how much more profit you can make or trying to get that perfect number. Sometimes I have, like, say if I made like $90, I'm like, okay, I want to make 100. So I'm waiting for it to go up to where I make 100, and eventually I walk away with like $50 because I was waiting for that perfect thing, and my setup already told me to get out. And yeah, just remember that if anything, you can always have another trade, and just remember to like stay on the sideline and just wait for that another good setup. You don't have to make that perfect number. So the third way how to avoid greed in the stock market is avoid scaling based off money or greed. Don't scale on your position without being emotionally confident and ready. And what this basically means, and I'll touch more further into it, but what this basically means is if you're making $100 a day and you're willing to risk $40 to make that $100 a day, you might feel comfortable doing that. However, let's say you're all of a sudden you want to make $1,000 a day. So now you're like, okay, I'm just gonna 10 times whatever I'm putting into the stock, and okay, so now I'm gonna make $1,000 a day. But you have to keep in mind that you're also at a position where you can lose for $100 a day now, and you might not be emotionally confident or to lose for $100 because that's a lot of money. So make sure you just stay in your lane, and like if you're making $100 a day, keep making $100 a day, and slowly increase your position size. But don't just increase your position size by 10, because trust me, you're going to get emotional in the stock market and you're going to end up losing a lot of money. So the fourth thing to avoid is the gambling mindset. Now, this is a major one, and one thing I would say is the casino mindset is a direct path to failure. Like it's like there's no way out of it, because the stock market is not a casino. Therefore, betting on stock will eventually blow up your account, and we've seen this numerous amount of times. And I've had this too, where I had a small account, and I basically try to do the gambling. I had a gambling mentality, and I ended up blowing up my account. So an example of this is like with earnings, right? Like usually during earnings, stocks are either shooting up or shooting down, and you might go into it like, oh, I think the stock is gonna go up, and then next thing you know, the stock goes down, and you already lost like 25% of your account. So make sure to not follow that gambling mentality. So what you should do, rather than do a gambling mentality, is actually take time out to learn techniques and strategies. Because you have to remember, we are trading amongst some of the most intellectuals, right? And these guys have been trading for decades. So trust me, if these gambling mentalities was actually something, then they would be doing it as well. But when you look at major traders, they're not gambling, right? And they've been consistently profitable. So why should we gamble as well? And the last one is avoiding FOMO. And FOMO is just the fear of missing out. So what does this mean? Um, Basically, don't place a trade on a stock just because the stock is massively uptrending, right? If a stock movement does not meet your setup, then sit back and wait on the sideline until your setup comes, right? So when a stock is massively uptrending, you can go into that stock thinking that, okay, it's massively uptrending, so I want a piece of that. And that's your greed. And then chances are, once you get into that stock, it can just start downtrending and you don't know what to do, because this is not part of your setup. You have no stop loss, you have nothing. You just getting in there purely because of your greed. So just avoid that in general, and you will be better off. You will be a better off trader. And one thing to remember is that not trading is still a position. Not a lot of people talk about that enough, but not trading is definitely a position. So it's way better to not trade and lost zero money and gain zero, rather than to go into a trade based off FOMO and lose 10% of your account. So yeah, guys, if you like this video, make sure to like and subscribe. And yeah, I'll see you on the green side.